What's going on, funded traders and future funded traders? This video is going to be about backtesting and how I set up my charts. I'm getting the question quite a bit, and I really do appreciate the question because it's causing me to think about why is it that I do what I do. So, as you already know, the strategy that I use is straight from the ICT teachings. But why do I set up these charts this way? What do these lines mean? And I really had to dig into understanding why is it that I do that. It caused me to remember, how I set up the charts and what exactly it is that I'm looking for. Many times I get on the charts around 7 o'clock in the morning, 7:30, 8, and 8:30, and that's when I'm starting to look for setups. In the trainings, since I'm doing everything in the New York session, New York midnight starts here, and news is released at 8:30. That's why I mark off this candle and the opening price there. And oftentimes, there's volatility because of the news. And so I usually mark off that opening price. But what I've learned after going back into understanding again, why is it that I do mark off the 8:30 opening price, which again, I appreciate the question, is in my back testing, in testing every day, setting up the charts, looking at the diagram or looking at, the entries, where are the rules, where are the fair value gaps. I found many times the entry for me in the back testing happens between the 8:30 opening price and the New York midnight price. Many times, not always, but many times. And so it became a thing, and it became a thing of habit of continuing to mark it off. So, arguably in this example, this is the 15-minute chart. This right here, this imbalance between this candle and this candle, which is this area, and I'll mark it off, you can say is a fair value gap. And if we stretch that out, this is the 8:30 candle. These three entries, 15, 30, and 45 minutes. For 45 minutes, there were potential entries to go long here, right? And had I gone in here and set up the chart, and this run right here, it looks like it did about 100 to 120 point run. That's enough to call it a day for me. So what I found is that I set up the charts, done the back testing, and many of the entries in the past have been here. Now, they're not always there. And as for the 9:30, or as for the midnight opening price, it's to me, it's a really strong indicator of, when it opens up, is it in a discount? Is price in a premium? But this all goes in line and with daily bias as well. So it's not just I'm setting it up here and I'm looking for an entry right here. It's just one of the many factors that I consider, that I use as confirmation, that I look for in my strategy and my way of trading, right? And so in this example right here, this opening price, once the news broke out, then, it took off and there was volatility. And then obviously today we had FOMC, which is why you see this wicked candle here. But I think there's more heavy news that's expected. You'll see that chart right here that I have that has all the news that's expected for the week. So I may not be trading at all for the rest of this week, because it's a lot of heavy news going on, and then we'll see what the charts have to offer. Because I think on Friday the Fed speaks again. And anyway, so hopefully that helps. I'll drop a link in the description to the economic calendar that I use. And again, thanks for the questions. Hope this was helpful. See you soon.